What's going on, everybody? Happy Monday. Hope you had a wonderful weekend. Getting to my weekly watch list a little later than normal. Had quite the busy weekend, so taking care of business today. Well, let's see here. We had a little bit of news, I guess you could say. The U.S. credit credit rating actually downgraded uh, after hours on Friday, I believe it was, from a AAA rating down to AA1. So still a good rating, but you could look at that as a little negative news. So what happened this morning? We had the indices kind of gap down to start the day, but they have retraced back up to levels for the end of day Friday. So kind of shook off that negative news, if you will. But let's take a quick look at the commitment of traders report from last week. And this is, of course, the institutional buys and sells. Got that on my screen here. Last week looks like the Nikkei, looks like the big banks and institutions increased their net longs 4%, as you see here. Swiss franc 3.5%. South African rand, which is not a currency I trade, but it's on this list. And then, of course, the Dow Jones 3.5% up. Canada dollar 2%, as well as U.S. oil, Japanese yen 1.5% there, and then the 10-year Treasury and Bitcoin to round that out. So it looks like they bought a pretty good chunk. Well, they increased 1% on Bitcoin. So when you look at the actual weekly long contracts and short contracts here, wasn't a gigantic amount, but relative to their total amounts, long here, short here, yeah, it ended up 1% higher. So that's the long side. Now, if we go down to the short side, look at the red on the Nasdaq, the S&P 500, and the Russell 2000, which of course is those smaller companies. They sold a lot on those three indices. So yeah, indices kind of split. I mean, you got three of the major ones getting sold off last week, and then on the other end of it, though, you did have the Dow increase 3.5%. So a little bit of mixed extremes, if you will, for the indices. But yeah, having said that, that kind of rounds out our commitment to traders. As far as our top setups, I'll get to that in a second. Actually, I want to go to my Eco Surprise meter. So this is just basically a gauge, if you will, of the percentage of surprises to the good side versus surprises to the negative side, just at a glance for the currencies. The majors, the 8 majors are on the top there. I tend to ignore the 4 on the bottom. Like I said, I don't trade the Swiss franc, the Turkish lira, the German and the Swiss. I'm German and the Chinese yuan. So I don't really pay attention to the bottom, but I do pay attention to the top 8. So the clear winners of late have been the British pound at 71%, New Zealand dollar at 88%, and then of course Aussie dollar at 60%. On the loser side, it's the Swiss franc, or excuse me, the Japanese yen, actually the worst, so 38%. So basically, at a glance, you would look to potentially buy the pound, sell the Swiss. I keep saying Swiss, I mean Japanese yen. I'm sorry. So pound Japanese yen, that might be a potential buy. Same thing with the New Zealand Japanese yen, potential buy on that currency cross. Or even, like I said, or even the Aussie dollar Japanese yen. So yeah, basically let's sell the yen and let's look to find a buy with the pound or the euro or the New Zealand dollar or the Aussie dollar. Okay, so that's basically it. So if I take a look at my top setups here, and I'm just going to go ahead and get rid of the items I don't trade. So I'm going to get rid of the bonds. I'm going to get rid of the commodities. And then I'm going to get rid of a couple other things within here. China 50, copper, I don't trade that. Let's go down here and get rid of the platinum, the Russell 2000. I just don't have access to those assets in my trading platforms. That's why I always just get rid of those, just to save space. Get rid of the South African rand. And then I think that was it. US, yeah, that's basically it. So this is my list I'm looking at. I'm going to further get rid of the neutral. I only care about actionable setups, so I'm going to get rid of my neutral assets. So I'm looking at bullish and bearish. Okay, very bullish. We've got the Bitcoin, we've got the FTSE 100 in UK there. the DAX in Germany, and then the Dow Jones here in the U.S. So very bullish, very strong ratings. So we're definitely going to keep an eye on those this week. NASDAQ as well, the dollar, Japanese yen, the S&P 500, the pound yen, all to the bullish side. And then on the bearish side, we got the euro pound and the euro New Zealand. So yeah, I mean, that's basically it. Let's take a look at our very bullish setups first. We got the Dow Jones, the DAX. Let's go take a look at those on the chart. Dow Jones right here, US 30. Okay, so clear uptrend. We got my Fibonacci lines on there from this low point to the current high point. So, you know, I like to see it come back to 38% retracement, 50%, or even the 61.8 level. It's been pretty strong ever since the dip that we did get from those tariff shocks, as you can see. So what I would like to see is price come back to this point right here, which is a daily demand zone, and it's a 4-hour demand zone. It's very, very similar candle structure. So I like that. What I would love to see first, before price comes back for a potential buy, is I would like price to go even higher in the shorter term. That way when price, so if I can get price to come up this high, like you see this blue line, I kind of mapped it out the other day. Let's do this. I'll make it a little easier to see what I'm pointing out here. So current price, so I would like to see price come up to this point. Let's make a new low there somewhere, or a new high point, I should say. Okay, so I'd like to see this. I'd like to see price raise a little higher, form a high point, which would make my Fibonacci levels have to go to the top there to catch that swing high. And then I'd like to see a pullback into the 38.2 retracement, daily and 4-hour demand zone. That would be a pretty good potential buy setup right there to the long side. And then obviously just see price, you know, from this point. Hopefully there's those unfilled orders and they'll just push price up. So that would be a good buy point down here. Okay. So remember, the green is my 4-hour demand zone. The daily, or the yellow, is my daily. So as you can see, it's pretty much the same candle, right? Look at that. Had a nice red down candle there. If I get rid of my order block tool, you can see that 4-hour red candle. And then over here, the daily, it's the same range. So that's a pretty good setup. I like that a lot. That'll definitely be on my setups. I don't even have an alert. So I'm going to go ahead and set an alert in here. Let's do this right there. Okay. Got my alert set. I'm just going to throw the alerts out at least a week. So through end of business on Friday. So that alert will be set. If price comes down at any point this week, it'll trigger my alerts on my phone. Then I can take a quick look at my chart, see if I get a reversal candle of some sort with some volume profile spikes. So really good setup there for the US 30. But again, I prefer to see price come up a little higher, like I put here. So for the time being, I'm just going to put it at the low, or at the high, I should say, of the current high. Okay. So that's US 30. That's Dow Jones. What else we got over here? What else we got? Let's go back over here to, the DAX in Germany. We'll go take a quick peek at it. The DAX 40. Here's the DAX 40. I got my Fibonacci lines from this low point here to the current high point. So it's at the very extreme high point, as you can see. So not interested unless price comes back down to this area, the 38.2, and I've already got an alert set. I would like to see price go up a little higher and then give me a sharp decrease. So let's just go ahead and map that out. Okay, current price. I'd like to have it come up a little higher, come down to my 4-hour daily demand zone, and then I can potentially place a buy order. Okay. I'm trying to push my, there we go. Yeah, so let's see something like this. Okay. So that's the that's the DAX. FTSE 100. Okay, United Kingdom, what you got going on? What you got? Okay, so there's my Fibonacci, low point to high point. And Yeah, I mean, I've got a pretty good daily 4-hour demand zone going on here. Just like the last two, I would like to see price rise a little higher first, maybe break through this supply zone, this 4-hour supply zone here. Um, and that way I can get a very similar setup. I mean, these are all looking pretty similar, right? That would be a good buy point. But again, I would prefer 38.2 level to bounce. So if I could get my Fibonacci, to come up like that, to where when that price retraces, it hits at 38.2. That's what I would like to see. But for now, I'm just going to leave it there, just like the other three indexes I looked at. I'd like to get a little bit higher. Actually, let's do this. Let's do this. Let's do this. All right. Current price, I'd like to see it rise a little higher before coming down to that zone. Something like that. Okay. So that's the footsie. Got my alerts. No, I don't have an alert set. I'm not going to set an alert unless I get the 38.2 level to push a little higher. So we'll just skip that one for now. Bitcoin. Let's see what Bitcoin's up to. Bitcoin. All right, there we go. 4-hour here on the left, daily on the right. Keep that in mind. Okay, so we have hit I believe that was a weekly supply zone. Is that right? Let's take a look at that. Let me look here. Weekly. No, it's not a weekly. I think it's a daily. Why do I have an orange set up in there? 1 second. Let's take a look. Okay. Oh, duh. So I got my daily supply zone over here, which price is in now. It's in the 4-hour supply zone as well. But I want a long. So look, I don't want to buy anything in this area because chances are that daily 4-hour supply zone could push price down a ways. So hopefully it pushes down, retraces deeper into my Fibonacci level somewhere. I do have an alert set right here at 99.6. Just below the 50% retracement. So between 50 and 61, pretty good spot. All right, I do got that's actually a 2-hour or 1-hour demand zone. So that's a potential buy point. I got probably a little better one down here, retracing a little deeper. So yeah, I got an alert set there just to see how it bounces around if and when it returns. So that's a potential buy point there. What else we got? NASDAQ. Okay, let's go take a quick look at NASDAQ. The NAS 100 US. Okay, here we go. So Fibonacci on this low point to this high point up here. I do have a daily and a 4-hour demand zone. This is very similar to the other couple indices we looked at. I do have an alert set there. I would like to see price maybe go a little higher before retracing. So we'll get something like this. This is what I would like to see on the NAS 100. Go up a little higher to here, and then pull back into my demand zone to where I can buy to the upside. Get those unfilled orders to do the work for me. Okay, so that's NASDAQ. What else we got? All right, our first currency pair. So look, and then S&P 500. Let's do S&P 500 real quick that way I can get rid of or be done with the indices. Yeah, same thing. Look, all these indices look very similar. Fibonacci on my low point to my high point. Come down to the 38.2 level where we got that daily and 4-hour demand zone. Look at this. I mean, we got some pretty decent options on the indices. Just I need price to come down, get those unfilled orders, and buy to the upside. So who knows? That might take a few days, might take a week. I mean, as long as we've got a bullish rating on all these indices, then I'll keep those alerts on there. Okay. Now let's get to our currencies. So we got the dollar Japanese yen and the British pound Japanese yen to the long side. Okay, they're bullish, 5 or higher scores. So let's go look at dollar Jap and pound Jap. I was looking at these earlier and I was wanting to pull the trigger and buy one, but there's sometimes when your analysis looks great, your sentiment, your fundamentals, sometimes your gut, when you've been doing it 10 plus years like I have, sometimes your gut just says, I don't know about this. I don't feel too well about it. So here's what I'm talking about. Okay, so dollar Japanese yen, I got my Fibonacci on my low point to my high point. Now price came down and actually hit a daily demand zone. Okay, this candle right here, that's a red candle down before the price push up. I like how price pushed above all this congestion over here to the left. It also pushed above this little support area here, and it pushed right into this resistance point up here. Okay, if we're looking further back in time, and then that's where it rejected and came back down to my daily demand zone. But within that daily demand zone, I did have a little bit of a demand zone over here on the 2 hour, I believe it was 2 hour, 1 hour right here, but it was a gap up from that point there. Okay, and this would have been last Sunday. So not yesterday, but the previous Sunday. Well, since price gapped up, I didn't want to place a buy order in there because gaps often get filled, and then that's exactly what happened. So you see right in this area, okay, price came, touched that demand zone, it jumped up a little, but then it reversed and filled the gap. So that's where we were at as of Thursday. Price went up a little higher, came back down, and now currently we've broken that daily demand zone. Okay, so but below that daily demand zone, we actually had a 1 hour demand zone just below it. Okay, if I go down to my 1 hour time frame, and you can see this green rectangle sticking out, you can see I got some daylight between it and the daily demand zone that just got broken. And price, as you can see, wicked right into that zone, and it's currently went up, touched this daily supply zone, this hourly supply zone, went down as basically going sideways. So it's just basically going sideways. I like the candle, and I like the volume that came out of that to the upside. So, yeah, I could place a buy order right there, and it'd be a good trade. Whether it works out or not, it's a pretty fair trade to take. But I just didn't like how price sunk all the way through that daily demand zone. I just didn't like it. Because the higher the time frame, whether it comes to supply or demand zones, the higher the time frame, typically the more it should get respected. Well, I have an hourly demand zone, but it cut right through that daily demand zone, and I just didn't feel 100% on taking this trade. So I'm basically just staying out of it for now. And one thing that's going in its favor, if you see my RSI down here, it is kind of going against what the price action candles are doing. So what I mean is, you see all these low points, this low point, this low point, this. See how it's all going down, and down here on the RSI, you can see it's diverging. So there's a low point, there's a higher low. Actually, let's do this. Low point, it's basically going up. It's diverging. The low points are going up. See that? So that in itself is a good reason to potentially place that order right here where it wicked in, but it was earlier before I woke up. I really missed the best possible point, but as you can see, price is trying to creep back down to it again. So as long as I can continue to get a divergence on the relative strength index, if it comes back into that zone, maybe a little deeper to collect some more of those unfilled orders, I might place a buy order. So basically, yeah, if I take my little projection tool, current price there, as long as I can get something back down here, I might look to potentially buy that market to the upside. Now this is some really, really in-depth advanced technical analysis, so I don't expect a lot of you to really understand it, but it's just goes to show you what's in my head whenever I'm looking at these charts, because of all the years of watching patterns and how price action unfolds and how the relative strength index does affect it, because it shows how volume and momentum are changing. Okay. Another thing I've got added in here for this market, if I go back to my 4 hour, I've got my I got my VWAP. Okay, there's a tool I use called VWAP. That's volume weighted average price. And I put it down to this low point down here. And as you can see, it basically acts as a dynamic support and resistance. So in this case, the dynamic support. So yeah, I mean, here's something I'm looking at. I mean, if I can get price to come down as this red line keeps going higher, if price meets within that hourly demand zone, then yeah, that'll make me a little more comfortable about placing a buy order in that zone to the long side. So I've got my alert set right on that blue line, which what that blue line is, if you can look over here, okay, that blue line represents that former resistance line right here on that candle wick on the daily, okay, because price from here shot up. So it's all about variables. Trading's all about adding as many things in your favor as you possibly can to help you make a decision to buy or sell something. So yeah, that's what I'm looking at for the dollar Japanese yen. Yeah, I mean, look, another thing that I do like is how the president ended up calling President Zelensky and President Putin when was that? Earlier today, I think it was. It's all verbal, but they say that they're looking to try to make a deal to end the war over there. So I like the way that sounds for the U.S. fundamentals as well. Okay, the news moves markets. News moves. Now I don't place my buy and sell decisions based off of news like that, but it helps add to the narrative of a potential reason to be long the U.S. dollar. So that's something I'm looking at there. Yeah, so that's dollar Japanese yen, and then I think the other one we had was pound yen. Okay, pound yen's giving me a 5. I don't like it that the commitment of traders favors the yen over the pound, but when you add everything together, it is giving me a 5. I probably won't touch this unless it grows to a 6 or a 7, but let's take a look at it anyway. Pound Japanese yen, here it is, and daily up. Got our Fibonacci from the low point to the high point. My VWAP from here is basically right on price now. And then I got this VWAP from this point, and it's a little lower. So I'll be honest with you, this is another one that I might have placed a trade on had I been awake during this time. Because on a 2-hour time frame, you can see we got this demand zone right here, that red candle, that last red candle before the rise up. Look, price came down and touched it once, bounced up, dropped a little deeper towards the bottom of that zone. Unfilled orders pushed price up. In the process, it formed another demand zone right here. So because I missed the order down here, what I might look to do now is wait till price comes back down to this 2-hour demand zone and place a buy order from here. I like how the volume spiked upward after that. Price jumped up, and now that it's coming down, as you can see, I do have an alert set right there at 193.25 for a potential buy. And then obviously we got this VWAP red line in that demand zone as well. I like my chances on that for a potential buy. So dollar Japanese yen, pound Japanese yen, those are the two currencies I'm watching here over the next couple days or so to the bull side, to the long side. And then on the other end of that, the only bearish items we have is the euro pound and the euro New Zealand. Let's look at the euro pound real quick. Okay, so nice downward trend right here. Got my Fibonacci from the high point to the low point. Let's go back to a 4-hour, see if we got anything over here. I got some old lines it looks like I need to get rid of, so let's do this. Let's get rid of this old news here. Yeah, I mean, we're basically about to bounce into some demand zones. Now, this is a short sell bias, so I'm not going to obviously buy if it hits these demand zones. Okay, they would be used as a profit target, but not as a buy long. So I only want to short sell this market if and when I get a good entry point. 38.2 level, yeah, I don't really have anything on the euro pound. I mean, maybe take a stab at the 50%. It does have the master pattern center line of that blue box going right through that zone, so that's a potential short sale. I don't really care for it too much. Let's look at the euro New Zealand dollar, because that was my only other short sell option. And over here, got my Fibonacci going downward. Okay, so yeah, and right now it's actually trying to chew through a daily demand zone, as you can see. Okay, the last couple weeks, so it's chewing through that. If I can, and I've got a 4-hour supply zone I kind of like. I've actually got a alert set right here on this red candle before the downward drop. Now again, it dropped right into a supply zone. I mean a demand zone. Okay, so what I would like to see is for price. Oh gosh darn it! Hold on a second. Hate when I do that. Okay, so I would like to see price go and close below the rest of that demand zone, so somewhere down in here, before coming back to this supply zone to catch those unfilled orders and short sell that to the downside. Okay, so let me just map out my rectangle for my supply zone, and I'm going to make that red. Boom. Now, the other reason I want price to come below and close down here is because it would inevitably pull my Fibonacci level down to where the 38.2 level is now in that supply zone. Okay. However, it's not there yet, so I am going to leave it at the low point where it's currently at. Okay. So yeah, got my alert set for euro New Zealand dollar and the dollar Japanese yen and the pound yen. Those are really the three main currency pairs I'm looking at right now. Gold and silver, I believe, are a wash still. They're still neutral ratings, so I'm not paying attention to that at all. That's it. What you see right there, that's my watch list for the week. Okay, handful of indices, small handful of currency pairs, and Bitcoin. That's it. Let's take one more look at Bitcoin. Just see here. Yeah, nice strong uptrend. It's been bouncing back and forth between the 100,000 on the high side, on the low side. I want to see a pullback though, down to like, I mean, I have an alert set at 100,000 because I do believe that that's a 2-hour demand zone I put right in this area right here. Let's just go take a quick peek. Yeah, 2-hour demand zone. So look at this. If I zoom in, you can see what I'm looking at. All right, so that's my last red candle down before a big gigantic push up with pretty good volume. You see the big red volume profile bars down here? Look at that. When price left that zone, it shot up in a hurry. So I like that. Now price jumped up into this daily and 4-hour demand supply zone. And it actually closed above it, so we're good. So look, here's the thing. We've actually taken out those. We've actually taken out that daily supply and 4-hour supply. So yeah, basically, I just want to see price come down. Let's do this. I got to figure out a quicker way of doing this. But yeah, current price. Okay, right here. Let's just get a drop down into my demand zone to where we can buy it to the long side. Now, the 100,000 is also a psychological number. So when price does come down, there's going to be a boatload of traders get on there and buy it just because it hit the 100,000 level. But I want to see it come down to 99,500, 99,584 to be exact. If it comes down to this point, then yeah, I mean we've went through the 50%. Now we're between the 50% and 61% Fibonacci zones, Fibonacci levels. I like that. And if it comes down here, it's collecting all this liquidity to the left. See, we got all this congestion here over the last several days, last few weeks. All this congestion. Look at this. Here's what I like. We got all this sideways price action. All right. All that sideways price action in the blue. See how price just went sideways? If we can get price to come down below that box, there's going to be a lot of stop loss orders in this area for all those buyers that tried to buy around that 100,000 level to the upside, or just above the 100,000. So breakout traders. So below that blue box, there's a lot of liquidity there, a lot of stop loss orders. I'm just asking price to come down below those stop losses into this 2-hour demand zone where there's unfilled orders there. Stop losses on a long order are sell orders. So if price comes down to collect those sell orders, what's the opposite of a sell order? A buy order. That's where institutions and big banks are going to take those sell orders and feed their buy orders for price to go up. So that's what I'm looking for on Bitcoin. I've got my alerts set there as well. Like I said, 99,633 according to TradingView. So yeah, I like that. I actually like that. And I've got my alert set. Yeah, I'm actually going to push it out through, I'm just going to throw it out through Sunday. But yeah, I like that. I mean, I'll probably push it out if it doesn't hit it this week, because as long as we're getting all this sideways congestion, that's just doing nothing but building up stop loss orders below and above, to be honest, because there's people up here that are short selling it, obviously, because price keeps bouncing back downward as well. So there's liquidity above this zone. There's liquidity below this zone. So yeah, that first green rectangle, hey, price comes down, I might take a stab at this. Okay, to the long side. So yeah, that's basically it. That's basically it. Yeah, pretty short and sweet. Pretty short and sweet setup. I mean, as far as the calendar, the economic calendar this week, let's do this. This week, we'll just take a look. Now today's Monday, so we had. Oh yeah, that's the other thing the last thing I wanted to point out. So Australia this evening is projected to drop their interest rates 25 basis points. So another trade I potentially wanted to look at is Aussie. Let me go down to my. Now I'm just going to show my neutral setups, because there was a potential buy setup that I like here for, what was it? Was it the Swiss Jap? I believe it was the Aussie Jap, Aussie Japanese yen. Aussie New Zealand, yeah, short sell of the Aussie New Zealand. So it's currently a neutral rating of a -4. Remember, -5 or lower is a bearish rating, a bearish bias. So let's go take a quick look at Aussie New Zealand, because as you can see over here, we got a 0. We got a neutral rating for the interest rate. Remember, the interest rate is our very last category. If Australia dollar does in fact drop their interest rate like they're projecting to do, then that will turn to a 1 or a 2. So that'll put it into a bearish bias. So let's just take a quick look at Aussie New Zealand dollar. And then this will be the last currency pair. This will be the last one we look at. Aussie New Zealand dollar. There it is. Yeah. So here's what I see on this one. Now, we've had a strong drop in price, but we have had an increase in price over the last couple, 3 weeks. So when it comes to these interest rate hikes and decreases, man, price can really move a lot in a short amount of time. So up here, I do have a daily supply zone. And then within that daily supply zone, I do have a 4-hour supply zone, which is that red box. So on the Aussie New Zealand dollar, and I've got an alert set there as well, because yeah, I mean, as long as Australia drops their interest rates like they are projecting to do, just because it goes down doesn't mean Australia automatically goes down. Now, what it could potentially do is drop, raise back up, drop, raise back up, And all this time it's collecting liquidity, so I'd like to see something like that. Okay, that's my 4-hour chart on the left. If I can get some wild, crazy price action like that, then I will short sell that sucker if it does hit my 4-hour daily supply zones. Because at that point, it would create a master pattern where price is going sideways like it is here. Goes to the upside to collect liquidity, goes below that to collect liquidity, up to collect more liquidity, down to collect more liquidity, and then up again to collect liquidity, but only this time it would be hitting unfilled orders, unfilled short sell orders. That's where I would want to place a short sell to the downside. So we'll see how that goes. Now that blue line, that projection line, you see it, that it doesn't have to look like that. I mean, hell, it could just do something. It could just go straight up, right? It could go straight up and touch it. If it does that, I'll sell. Okay. If it does something like this, hold on a second. If it delete, it could do something like this, down and then up and then down like that. I don't care what that pattern looks like, but if it comes up there and touches the 1.1 level, 1.0999, so basically 1.1 psychological number, big gigantic decrease on the well, not big and gigantic, but a decrease on the interest rate for Australia dollar. Yeah, it's a pretty good place to short sell. Now that's a lot of pips. That's 100 plus pips. That's 100 pips to get up there. But hell, interest rates move price rapidly and a long ways. It has a very high chance of doing that. So yeah, I'm going to go ahead and have my alert set, even though it's not yet showing me a bearish rating. Okay, it's still neutral. But again, if that flips negative, that right there will turn into a -1, which will make that to a -5, -6. So that's it. That's it. I believe that's it. Yeah, this week, I mean, yeah, Canada's got some inflation reports coming out tomorrow on Tuesday. British pound consumer price index on Wednesday. That's inflation. A bunch of stuff on Thursday. We got some manufacturing and service purchasing manager index reports coming out. So yeah, Thursday will be a pretty decent news day, and then Friday we got retail sales for the pound, retail sales for the Canada dollar. That's about it. So yeah, I think that's about it. Like I said, I'm sitting on my hands for now. I really wanted to get in this dollar jap or that pound jap trade, but I just need price to just do a little bit more for me, and then I'll feel comfortable. But as of right now, sitting on my hands. But I got my weekly watch list on all that you see there. So that's about it. Have a wonderful trading week. Stay safe, and we'll talk to you next time.